Good afternoon, everybody. Thank you for choosing to join Adelaide Capital's New to Market CEO webinar, part of our Mining Entrepreneur Series. With me is our founder and CEO, Deborah Honig. Hi, Deborah. And today we will receive a series of 5-minute presentations followed by a group Q&A. We won't be doing the usual chat box questions, so please feel free to email us, either deborah@adcap.ca or myself, vanessa@adcap.ca. As always, there will be forward-looking statements, so please visit the company's respective websites for more information. And now we have a very special keynote speaker today. With over 4 decades of experience in natural resource investing, formerly of Sprott Global, founder of Rule Investment Media, the man himself, Rick Rule.
Thank you very much for having me on. I appreciate the opportunity to participate.
And so we're just going to have a chat sort of back and forth here. Deborah, jump in anytime. I guess I could start the questioning. A question, Rick. What is one question that you've seen in perennial successful CEOs?
I guess the character traits that you look for are curiosity and tenacity. Curiosity in the sense that if a CEO doesn't try to solve a problem that other people haven't solved before, or try to solve a problem differently, that he or she doesn't contribute very much. The opportunity that you have to be successful if you're doing things, precisely the same things, precisely the same way as all your predecessors, is very low. Tenacity, because you experience in every circumstance lots and lots and lots of challenges before you succeed. So I would say that what we look for is curiosity, really defining curiosity and tenacity. I remember, as an example, early on in my career, running into several people that have become really, truly perennially successful. Adolf Lundin, father of Lucas Lundin, comes to mind. Ross Beatty comes to mind. Robert Friedland comes to mind. And these people were driven by curiosity, really, truly driven by curiosity. They didn't build companies in order necessarily to become rich. They built companies because they had no second choice. They were so intensely driven by mission and curiosity that they couldn't help but be successful. And perhaps it was that curiosity and drive that made them tenacious. But all of them ran into substantial challenges. Adolf, as an example, ran into the Congolese Civil War, where 2 million people got killed. It wouldn't let something trivial like that get in his way. So I would say curiosity and tenacity.
Absolutely. And do you think there is tenacity? What I hear is not just tenacity, but focused tenacity. Not
well, focus certainly. Focus certainly. I would have assigned focus back up into the curiosity circumstance. When someone wraps their head around a project that so completely fascinates them that the rest of their life sort of recedes in favor of devoting themselves to what it is that they're trying to accomplish. But irrespective of what, where you assign that in somebody's personality, I think, focus is critically important. What you find is that the successful entrepreneur is involved in what they're doing 60, 80 hours per week. But interestingly, the successful entrepreneur doesn't consider it to be work. If you define work as some vaguely unpleasant task that you engage in to sustain your lifestyle, most of the successful entrepreneurs that I met, myself included, feel like they haven't worked for years because they would do what they do for free if it didn't pay so well.
I recall in one of your recent interviews, I think you mentioned Mr. Ross Beatty. Maybe he'll be successful at retiring, but I'm sure we'll see him again on a webinar soon.
I was visiting with Ross 3 days ago, and I can assure you that he will, for the second time, fail retirement and fail it fairly quickly. I don't think that he will fail it in July or August, which are very nice months to be sheltered in on Bowen Island where he lives. And I don't think that his wife will let him return to active employment while there's a vegetable garden to cultivate or bees to look after. But this fall, I can assure you that Ross will, like myself, fail retirement.
Well, that sounds like a good balance. And speaking of work and life balance, what do you think for these new to market CEOs? You know, is it you have to earn your stripes, and what, in your opinion, is balance from the get go while they're building their reputations, building their companies?
I hope that the young entrepreneurs who you are introducing to market have lives like I had, which is to say that the process of building a business is so much fun that in and of itself creates value. Certainly, for most of my career, my social life has been, it revolved around work. And one of the wonderful byproducts of what I've done professionally is I've met astonishingly nice people. If somebody looked at my life from the outside, they would laugh when you asked me a question around work-life balance. For 40 years, most of the travel I've done, as an example, has had an investment conference or a mine tour tacked onto it. And I don't resent that at all. Industrial tourism, which is what I call going to a very strange emerging market and being shown by local peoples what they think is interesting, what they think is important, having dinner in their house with their kids, is for me much more fulfilling than anything that I could have gotten out of a package tour or a cruise ship or some guidebook. So I guess it's how you approach your life. But I would suggest that you involve your life in something that's so interesting that the balance takes care of itself.
Yeah, that makes a lot of sense, Rick. Thank you for sharing that. For me personally, I love the people in our business, and that's why I've been in it for a long time too. The human element and finding out just the cross section of the multifacets of talent and intellect in our business, from the technical, the markets.
You know, we probably need to say that for you know, many people have different aspirations in life, and for them, other parts of life would be more important than work-life balance. I get that for some people, but work is something that they have to do to sustain other aspects of their life. That isn't anything that's necessarily burdened me. It doesn't mean that I would recommend my course, but I would certainly recommend my course for an entrepreneur. If an entrepreneur didn't derive a lot of satisfaction and a lot of ancillary benefit from the commercial focus of their life, they should probably choose some other lifestyle.
Yeah, that makes a lot of sense, for sure, for sure. Another question for you, Rick. You advocate that investors, this is a market question, you advocate that investors seek a warrant in financing, and you've done well with your warrants. Yet this can also develop an overhang in the market for a company and the share price performance. So do you have any comments on the right balance or anything on that topic?
The right balance depends on the speculator. I'm not a trader particularly. I'm a speculator, and that's very different. For me, the share structure is unimportant because I'm going to make money or lose money by being right or by being wrong. To me, money is made in exploration by answering unanswered questions. And if I supply the capital to be the catalyst to answer the unanswered question, I want to get paid twice. I want the warrant. The fact that there's a warrant overhang, which might depress the share price for 6 months or 7 months, is of concern to a trader. But I don't care. It's absolutely irrelevant to me. What I'm looking for is not a stock that goes from 25 cents to 37.5 cents or 51 cents. I'm looking for a stock that goes from 50 cents to $5 as a consequence of exploration success. To me, the best of all possible circumstances is a successful outcome with a warrant overhang that depresses the share price so I can buy a whole bunch more, having already spent the intellectual capital to understand the physical value of the asset. The idea that I would buy a large position with a restriction, an illiquid position, when other people had smaller, more liquid free trading positions, but without getting a warrant, is anathematic to me. I don't really understand why I would do it. Why would I subject myself as a Canadian to a 4-month hold? Why would I subject myself as an American to a 12-month hold? Perhaps if I lived in Australia, where I subjected myself to a 24-hour hold, a discount to market might be more palatable. But the idea that I am going to contribute capital to an exploration effort where the logical expectation over time is failure, that's the way the numbers work, and a restriction without getting a warrant, is just silly. It's just purely silly. I can understand from a trader's perspective, where they have trauma holding stock over a long weekend and don't really understand why they own the stock that they own, how a warrant might be problematic, particularly if I got one and they didn't. I understand that completely. But from my perspective, there's absolutely no incentive to contribute catalytic capital without participating in the catalyst.
I agree. Plus, if they're successful in their campaign, they're going to need money anyway. So you get a second fundraising with the warrant.
That's a really good point. You know, people that look at these warrants don't understand from the issuer's perspective that they're a second fundraising with no fee built in. By the way, if an issuer comes to me and says that he wants a trigger, he or she wants a trigger, let's say we do a 50-cent placement with a 75-cent warrant. And if the issuer says to me, that's okay, but if the stock trades at, pick a number, 95 cents for 20 consecutive days, you got to use the warrant or lose it. I'm okay with that. I don't need to make all the money in the world on the warrant. I just need to make some money if I'm successful.
I actually dislike accelerators. I think you're giving somebody something. Why take part of it back?
I'm all ears, ma'am. Show them to me.
The warrant debate, I mean, it persists, but I'm with you. And also, like, I come from an investment banking perspective. I worked on a trade desk for 10 years. I can't tell you how many deals I've sold and how many deals didn't sell because they didn't put a sweetener on it when it would have been an easy deal to sell with a warrant or a half warrant or whatever.
Mm-hmm. Well, I can't speak for the issuers because I'm not one. But from the point of view of a guy who's written hundreds of checks over 4 decades, the idea, as I say, that I would participate in a venture where the expectation ultimately is failure without sufficient incentive just makes absolutely no arithmetic sense to me. What I've learned over time, by the way, is that when I come into a period of time like today, when warrants are generally unavailable in private placements, the market is telling me that the market is too overheated for an old guy like me to participate. When there isn't much to buy, it's probably time to do some selling. So really, market terms are a very good indicator of the market condition from my point of view.
Yeah, that's a very fair point. I always find it's interesting when companies want to bicker over 1 or 2 cents on a financing or a half warrant, and they end up spending so much time trying to raise capital. And time's money. Like, why do you care that much about the dilution when you need money to go drill and explore? Like, why are you going to spend so much time marketing a deal that's unsellable, really? So I'm with you. Price it to sell, move on, take the money and explore.
Correct. Correct. In particular, if you're doing some business with somebody like the Leedens, where their negotiation is to call you up and say, we're raising $20 million. The family is putting up $4 million. There's 80% left to market. You've been around us 40 years. We'd like to show it to you first. That's the right kind of negotiation. We eat our own cooking because it's the right thing to do. And oh, by the way, it tastes pretty good.
Yeah. I think you're seeing a lot more companies do rights offerings and things like that, going to their existing shareholder base first.
I love rights offerings. I understand from an issuer's point of view that there's some timing issues with the regulators. I understand too that if they price them incorrectly, there could be the embarrassment of having an existing shareholder base that can't or won't take them up. I've offered for many, many, many years to issuers that I know that I'll backstop their rights offerings. If they give the existing investors the opportunity to participate, to keep the capital they've already put in place with new capital, that's the most respectful possible thing that you can do to the owners. From my own point of view as a check writer, it also shields my reputation. Probably 100 times in my career, I've been vilified by adding capital to companies on terms that I considered to be advantageous to me, that the existing shareholders considered to be disadvantageous. In a rights offering, I can say to those whiners, put up or shut up. You know, if you think it's so cheap, sign up for an over allotment.
Yeah.
Otherwise, don't complain to me.
Well, what's more disadvantageous is a company that's got no money to drill. So
How true. How true.
Since we're on the topic, I find it interesting. What other pitfalls have you seen CEOs make or companies make when they're going to finance or develop projects?
Many of them are, well, it probably isn't a problem. It's probably an advantage to them. But in terms of approaching me, many of them are too narrative oriented. The idea that somebody comes to Sprott and begins to lecture us about silver, kind of a little boring. We know a little bit about silver. We're fairly well known in the silver space. We can spell it. I like arithmetic. If somebody comes to me with a brand new issuance, and I see that they've printed themselves 5 million shares at a penny, and now they're coming to me in the seed round at a dime. They spent $50,000 for a project with a pre-money market capitalization of $5 million. The whole arithmetic associated with that is insulting. I have a reasonable track record over 40 years, and when I manage other people's money, I charge them a 1.5% management fee, and I charge them a 15% performance fee after an 8% hurdle, cumulative and compounding. And the idea that these morons can print themselves 5 million shares at a penny and do me a favor with a 10-fold markup in 4 months is preposterous. It's absolutely preposterous.
Oh, sorry, go on.
I was just going to say, you mentioned earlier that structure doesn't matter that much to you, but I think it does in certain circumstances like this. And I agree with you. I hate seeing the big lift off of like no work or no money spent.
Well, the structure is arithmetic, which is to say they made themselves a bunch of stock at a penny, and then they propose to charge me a dime. I would suggest that that's arithmetic. If there's a warrant overhang at 30 or 40% above market, I'm much less concerned. I'm concerned in some of the intricacies of what you might call structure. As an example, the discrepancy in terms between warrants and options. Both warrants and options are the same thing. The question is who gets them. Issuers that are really, really, really fair issue warrants at the same terms as options. If there's 5-year options, then there's 5-year warrants. Managements would prefer 5-year options and half-year or 6-month warrants. When a manager hears that from me, he or she often says, but that's not fair. I work at the company 5 days a week, and I'm forced to say, well, you're right, that's not fair. My money works there 7 days a week. You only work 5 days a week. So really, I ought to get 7/12 of the benefit, and you ought to get 5/12 of the benefit. And by the way, unless you propose to reprice my warrants if the market goes down, don't you dare reprice your options.
I think investors like to see management aligned, but aligned with real dollars too.
Mm-hmm. Agreed. Absolutely agreed. If it's a wonderful opportunity and they know the opportunity better than I, why wouldn't they avail themselves of it?
And speaking to maybe some of the younger people that run companies, I don't think it's necessarily a percentage of the company, but more a percentage of your net worth that you're putting at risk in it, which I think is a more relevant data point. Going back to what you said about rights offering, we had a question from the audience. Why do you think there's not more rights offerings in Canada?
Because it's too easy to raise money in Canada. The private placement market is so robust that companies don't need to take the time involved in the rights offering memorandum. And they don't need to solicit their shareholder base to drum up the necessary capital when there is so much capital in the market trying to get into the space. Many managers, not the best ones, by the way, but most, prefer dumb money to smart money. The really good issuers prefer smart money to dumb money. But sadly, 85% of the issuers out there aren't smart issuers, and they prefer stupid money to smart money.
And I'm sure they want to pay the investment banks too.
Well, there is that unsung advantage to paying investment banks that you often get research associated with it. I understand sometimes that you have to pay the devil, being a former devil myself. But one of the lovely things about the circumstance that we're in today is that investment information has become so democratized. There are all kinds of sources of information like yourself. When I was a youngster coming in the business, knowledge came from the top down. It was delivered by the big investment banks, and occasionally there was some conflicts associated with that information. The idea that there are 10,000 sources of information now is all good, despite how preposterous some of them are.
I think it's a huge theme that we've seen throughout the pandemic. Like, the individual retail people have huge management access now through platforms like ourselves and other people. And I like it. I think it levels the playing field, makes it a lot more interesting, a lot more fair.
I agree with you, Deborah, and thank you for that. One of the things I'd like to say to people is that you have much more access to good managers than you know. An entrepreneur who is passionate about what he or she is doing, that doesn't care about opera, they don't care about popular culture, they don't care about movies, they don't care about sports. They want to talk about their business. And if you have the opportunity to conference or on a call or some other way to visit with these people and they don't interact with you, they're telling you something very, very, very important, which is to say they don't give a damn about their company. I remember very early on as a young man being able to get hold of Jim Bob Moffat, who started and ran Freeport McMoran, and I was intimidated to approach him being a 21-year-old. I couldn't get him off the phone. I asked him questions about Freeport. I was a nothing, nowhere young guy. There was nothing in the world he wanted to talk about so much as Freeport McMoran. And one of the symptoms of a serially successful entrepreneur is that they're dying to talk to you about their business. You have much more access. And if you don't have access, throw them away. They're bums.
It kind of ties into one of the attendee questions here. Strategies for non-geological investors when looking for explorers. Example, avoid companies with G&A spending. I think that person answered their own question. Thank you for that.
Well, that's a really good way to start. We had a young intern, financial speak for slave, 10 years ago. And one of the things I assigned this young person to do was to pull 25 TSXV issuers at random and look at their financial statement and look at their balance sheet and their income statement and tell me what they found. And the young man said, well, tell me what I'm looking for. And I said, no, actually, I didn't know what he was looking for. I just wanted to see the way he thought. And I understand that 25 companies isn't a statistical representation of the TSXV. But after about a week, he said, I think I got it. I said, okay, what do you think you have? The median among 25 public companies was that over 65% of the money raised went into selling, general, and administrative, and 35% went into the ground. If that company had been private and they were approaching a joint venture party like Tech would have allowed them maybe 12% of the total budget in allocated overhead. But the median of 25 issuers was that 35% went in the ground, while 65% went to selling, general, and administrative expense. In that case, you don't have to worry too much about the geological talent because they're not employing it, except for with 35 cents on the dollar. If you look at an industry where over decades, the return on capital employed by the majors hovers in the mid-teens, and then you only employ 35 cents on the dollar, let's assume that you got the industry average return on capital employed, and you got a 15% internal rate of return on a 35% expenditure. The arithmetic around that is nonsensical.
Thank you, Rick.
Yeah, I was going to say, look at what some companies spend on marketing, and I'm glad that the regulators are starting to crack down on it, because I think it's important to get out and tell your story in an honest and reasonable way. But a lot of money gets raised and pumped into marketing strategies, and I mean, our company is one of those strategies. So maybe it's a little bit talking out of both sides of my mouth, but I really do think that companies should be more disciplined and held accountable for the dollars that they spend on marketing.
And maybe it goes to scale. Maybe the real penny dreadfuls. I understand that it probably costs $250,000 to keep a public company alive. So if you're going to engage in a public company, you know, probably the minimum annual expenditures, the minimum annual raise that makes it even marginally economic to be public is probably $2 to $2.5 million a year. The company that has succeeded in raising $600,000 probably has probably already consigned themselves to failure from an arithmetic standpoint because they don't have the scope in the company, pardon me, to sustain themselves as a viable public enterprise.
So I guess as we start to wrap up our segment of the session, Rick, can you talk about some of the things that you see that have really changed over the last little while in the mining industry and things that have stayed the same?
I would say the thing that's changed among the juniors in the 45 years I've been in it has been the phenomenal upgrade of the technical talent available to the juniors. There was a taint to the juniors. I'm not trying to say that there isn't now, but there was a taint to the juniors 40 years ago where the top grads from various schools or the top performers in the major mining companies didn't want to work for the juniors, either because of the taint or the variability of funding. Now the opposite circumstance is true. A geologist, a technical person who really wants to exercise his or her skills is attracted to the junior segment rather than to the senior segment. That's been important. The other thing that's really changed is the level of sophistication among managers in accessing capital, which is to say, it used to be, if you were in Vancouver as an example, that a source of exotic capital was Bay Street, you know, going across the country to Toronto. Now that same issuer attempts to mobilize high net worth retail traffic in the United States. They look to institutional capital sources in Asia and Europe as opposed to throughout North America. And finally, I guess the population of high quality managers is much higher than it used to be. The population of low quality managers is higher too. You know, there's probably 1,500 to 2,000 issuers worldwide who purport to be in the mining business. If you remember the lessons taught by Pareto's law, which is to say that 20% of the population base generates 80% of the utility, and understand further that you can run that same successful population base through the same performance dispersal curve, you end up with the knowledge that 4% of the management teams generate over 65% of the value. The fact that you have 2,000 issuers gives you a large enough population base that rather than worrying about 2,000 issuers, you can, as an investor, simply look for groups that have been serially successful over the last 15 or 20 years, which really means that you have to work a lot less hard and enjoy a lot better results. I would also, while I'm pontificating to your listeners, urge both your issuers and your investors to remember that these businesses are really, truly cyclical and capital intensive. And what that means is that to really make money in the sector, you have to go to the parts that are out of favor. If you aren't a contrarian, you're going to be a victim. Certainly as an issuer, you can step on a hot commodity, you can step on an area play, you can extort quarters or even dollar bills from widows or orphans, but you can't get rich. You get rich by finding value where other people can't before they've looked, and then hanging on tenaciously until you actualize that value and the sector that you're in returns to favor. Be a contrarian or you're going to be a victim.
I think that's very sage advice.
A pleasure.
Yeah, thanks so much, Rick. It's been a real pleasure having you participate.
One thing I'd like to do in closing, if you'll permit me, I like to have conversations like this with your listeners. Any of them who care to carry on this conversation may do so, and I'll give you an incentive to do it. If you come to a website, sprottusa.com/rankings, and list your natural resource stocks, please no cannabis stocks, please no technology stocks, please no crypto. I'll rank those 1 through 10. 1 being best, in my opinion, 10 being worst. And I'll comment on individual issues where I think my comments might have value. That's sprottusa.com/rankings.
That's a fantastic tool. I wasn't aware of that.
A pleasure. Thank you.
Rick, always generous with your insights and your time. Thank you. And we're not done. We'll be seeing you at the end for the closing remarks. Is that right, Rick?
That's correct. What time do you need me back?
Let's say in about an hour's time.
At the same link?
You got it.
I'll be there.
All right. We appreciate you, Rick.
Thank you all.
Thank you. All right. So now we're in the segment of our presenters. And up first, we have Alex Langer, CEO. Hi, Alex.
Hey, Vanessa. Hey, Deborah. How are you guys?
Okay. I'm going to take 1 minute of your presentation time just to plug Tina's charity before it gets too late.
Absolutely. Please do.
One of our team members, Tina Byers, has been fundraising for 10 weeks for leukemia and lymphoma research. She's literally $1,100 away from her target of $100,000. So if anyone's interested in donating, please feel free. I think the link is, or just Google my woman. No, wait, what is it, Tina? Just turn on your mic and tell us.
Man and Woman of the Year, MWOY.ca.
And it's Team Tina Byers.
All right, I'll do 500. So now you're going to
Alex Langer, step it up.
All right, I've got a favorite issue in the leads right now.
If we were running a contest, we know who won. Just kidding. And now I'll hand it over to Vanessa to do a proper intro.
Thanks again, Alex. Out of the gates, when it was that in April on the TSX Venture, Sierra Madre Gold and Silver, trading under symbol SM. And I'm so excited. We're working with Sierra Madre at their in Nayarit, Mexico. Alex, I'll let you hand it over to you so you can give us.
Okay, awesome. Well, thanks. That was really quite interesting hearing Rick speak. I've had an opportunity to hear him a few times, but this was excellent. I really enjoyed it. Looking forward to the question and answer period a little bit later and open discussion for sure. So Sierra Madre Gold and Silver, we are an exploration and hopefully future development company working towards consolidating in and around Nayarit, Mexico. I started this company about 3.5-4 years ago, along with a couple of co-partners. When I founded this company, there really wasn't much of an early stage silver company that if you wanted to invest in could grow into kind of a junior mid-tier status. If you wanted silver, of course, there was, Pan American, Fortuna, I'm a huge fan of. But if you wanted that early stage kind of higher risk capital, something that could, become something larger, there really wasn't much out there. The area of Nayarit itself, there is quite a bit of production there. It's a lot smaller scale of kind of private mines. There's processing facilities, there's plants, things like that, but no one has kind of come in and consolidated the area. So that's where our opportunity is. Our 3 to 5 year goal is to have about 50 to 100 million ounces of silver, as well as production from kind of 2 to 3 points, utilizing kind of a hub and spoke mining scenario. We'd have a centralized mill and facility, something that's modular that we could always add on to as things progress. You're able to start out with a lower capex, and if things progress well, you can always add on to that. Why Nayarit? Reason to be coming from our COO and co-founder, a gentleman named Greg Liller, as Rick had alluded to earlier. Greg's one of these gentlemen that's been extraordinarily successful. He's been in and out of retirement. So I actually got him on a weekday, and he agreed to come and join. So Greg has been in Mexico since 1993. He's an exploration geologist by training, but he's ran and operated numerous mines. He's actually had 7 projects that have gone from drilling all the way through to production, and a number of them that had significant M&A, including one that was like $750 million. One thing that's common with every one of his M&A transactions is that every one of these projects was taken out once they're in production. So you'll see a number of companies, the goal is to, start it, raise a bit of capital, drill it out, and then hopefully sell it for $1 gazillion. That doesn't happen too often. So we are looking for production. We're not scared of production. And that's where we feel the value can be added. Rest of the management team, I'll quickly touch on myself. I come from a capital markets background, so I think a little bit different than some of the CEOs coming up here. I was at Canaccord for a number of years, so I was on the broker banking side. Most recently on the corporate side, a couple companies that I've been a founder of and a good opportunity to run their capital markets. One was Millennial Lithium. We had a lithium brine project in Argentina that's gone on to definitive feasibility, trading with over a 300 million market cap. And then another one is Prime Mining. Prime Mining, again, we started, 30 million market cap, now pushing towards 400 million. We had a resource in Mexico, and that's been expanded. And you'll notice a number of similar names there from Prime to Sierra Madre. A couple other quick gentlemen. One guy is Greg Smith. Greg was most recently CEO of Calibre Mining. He still handled the process for the acquisition of El Limón and La Libertad in Nicaragua. And then two other gentlemen, Alejandro Carveo. Alejandro comes from a really well-known Mexican mining family. He runs our operations on the ground, permitting, working with the ejidos, anything like that. So it's great to have a presence there. And then the other gentleman is Jorge Ramiro, who's also a Mexican national. He's also CEO of a company called Reina Silver, which has done really quite well over the last year. In terms of our strategy, the first project we acquired, we call it Tepic. Previously, Tepic was in a public company called Cream Minerals. During its heyday, Cream had a market cap of over 150 million, but more importantly, they spent about $20 million in today's value in the ground, including 31,000 meters of drilling. We have every single one of those drill holes that's in our storage facility in Tepic. They did a bunch of met work, which came out positively, and they issued, I think, a total of 6 different resource reports. The ones we use are the 2 last ones. One was just over 10 million ounces of silver equivalent, and if you want to drop off the cutoff grade, the previous resource was just over 18 million ounces. So depending on how you want to play that. What we like about Tepic is really the infrastructure. Infrastructure is a dream. We're about 30 minutes from the town of Tepic, which is about 500,000 people. It's a paved road all the way to the last 3 kilometers. There's power to site. There's a railhead. So everything you want, and really a good hub for us in terms of the hub and spoke scenario. So for us, the area influence kind of around here is about 100 kilometers for some of those acquisitions that we do want to make. One thing I do want to quickly touch on Tepic in terms of the resource is the widths. You'll see that here. They're actually over 6 meters, which is really great and conductive to kind of the mining we want to do. So we're looking at an open pit scenario, then moving into kind of a bulk tonnage underground. When we inherited Tepic, the resource was just over here. It was under 3.5 kilometers, and that was 10 million ounces silver. If you wanted to include Once Boca South and drop the cutoff grade, you got to about 18 million ounces of silver. Fast forward to today, that's over here. We've gone from 3.5 kilometers to over 10 kilometers strike length. So really big potential in a short amount of time. We are currently drilling. I think we're on hole 15 already. We just started about 3 weeks ago. We're permitted up to 67. We're actually working to increase that permit to 200 holes just because exploration work has gone so well. With the 200 holes, we will come out with an NI 43-101 updated resource report. And if that goes well, then we'll move into PEA. Quickly on the share structure, I know Rick was chatting about that earlier. We have 64 million shares outstanding, fully diluted, only 66. We have about 2 million in broker warrants. Those are at 50 cents. We IPO'd at 50 cents. We're currently trading above 80, and we have $15 million in cash. When we went out to raise, I guess, our IPO round, we were looking for 8 million. The order book was over 32. We settled at 15 because that allowed us to do our first acquisition and subsequent work program, which is budgeted at $5 million. We've indicated to the market that that should happen this quarter. In terms of management and where we lie in terms of shareholdings, we're actually up and over 40%, if you include the founders and myself. We've been buying in the market actively. We have 10 investment funds that are part of the company. They come in kind of at a smaller level to begin with. That was by design. A lot of these groups come in and they want to invest, 3 to 10 million right away. But we were able to bring them down to kind of $500,000 up to 800,000. That was the largest investment with a full expectation. And as we acquire these new projects and as Tepic expands, they'll be able to come in for a much more significant amount. And with that, I think my 5 minutes are probably up.
Thanks so much for the overview, Alex. Really appreciate that. And yeah, it's an interesting story. We've been working with you for a while. It was exciting when you went public. Yeah, looking forward to having you back on in a few minutes to do the full round table. We've got some questions, but we're going to save them.
Awesome. Look forward to it.
So next up, we have Jason Kosak, who's CEO of Millennial Precious Metals that also recently went public. I think it's been, what, 6 weeks, Jason?
I believe so, Deb.
Yeah, it's good. Well, some people may know you from some of your previous endeavors. You were involved with Barksdale and Barkerville and Trelawney and Sable. And what am I missing?
Talisker, Minera Alamos.
Oh yeah, of course. Yeah, actually, you came to our in-person conference with Monera in 2019, didn't you?
Correct.
Yeah, nice. Well, let's hear all about Millennial.
Thanks, Deb, and thanks everyone for joining. Much appreciated. I'm a structural geologist, so I'll keep myself out of the weeds. If anyone wants to go into greater detail, feel free to message me. Just quick background on how this all came to be. Deb mentioned that I was a part of a bunch of companies, and we all my partners come from the Talisker group, and we did all the technical due diligence for the whole Cisco group of companies. And we have one company called Sable Resources, which focuses on Latin America, which Ruben Padilla runs, my partner. Another vehicle called Talisker Exploration Resources, which focuses on Canada. And this was our platform to really get a toehold into the United States. We did over 337 desktop reviews, primarily looking at assets in Idaho, Utah, Nevada, Arizona, New Mexico, avoiding California for obviously permitting reasons. Board disclaimer, I'm sure everyone's seen that. As myself, Deb, as you mentioned, I'm a structural geologist. I love solving problems. We was the first geologist into Cote Lake, which was usually a lode gold system, so orogenic system. Re-looked at the geology. It was actually turned out to be an Archean porphyry, put up 7.8 million ounces on the board. We sold it to IM Gold for $680 million. Then was with IM Gold. Eric Scrod and Sean Rusin then dragged me over to Barkerville, where Terry and I met and really put the kinematic and structural model together that unlocked the real potential at Barkerville, which is now 5.8 million ounces, and we started off at 0. So I met Ruben at Windfall, where we put together the model there, which is an intrusion-related system where they used to provide the shear system. My CFO has been with me since Trelawney days. As I mentioned, Ruben runs Sable. He was with BHP Billiton, where he found the extension to Escondida, which is 2 billion pounds of copper. Then he was with Anglo Gold Ashanti, where he met Terry, and they found Las Colossus and Gramalote. Mike Leskovic is with Northfield Capital and Nighthawk, Rob Cudney's group. And Sarah Heston just recently joined. She used to run the ASA fund, which now Merck runs. She's also a business professor at Stanford. What we're really trying to do here is build a multi-million ounce, multi-asset development and production company. And what we're really focusing on is assets that were overlooked and poorly understood. And as I said, we've proven that we love doing that. And focusing on near surface, leachable ounces with low stripping ratios. And why we do that is because they're extremely low capex and their cost per discoverable ounce is extremely low. So the dilution that you take you'll get dilution no matter what, because these are capital intensive businesses, is minimized by the deposit types we select. Quickly, from a share structure point of view, 135 million out, just over 23.4 million in the bank right now. And I think that sets us apart from a lot of other juniors in the space. Also, if you note, take a look at our share register. You don't see this roster commonly on junior companies. And the likes of Merck and Vescor, which is a $19 billion pension fund, and Regal and Century. Commonly, these companies don't come down sub $100 million market cap. And I think the reason why they do is the track record of myself and our team, really. The options are management options, and the warrants were broker warrants. I myself, I spent 10 years in the bush. Just so everyone knows, so geologists don't make that much money. It's not like I was running a hedge fund or I was an investment banker. I myself put in over $450,000 of my own capital, so it's a big chunk of my change. And management now just owns over 10%. Currently, we sit at about a $75 million market cap. What you really get at the end of the day, and I mentioned the management team, and everyone says though they have great management teams, and I think one of the defining characteristics of a great management team is not only have we put up over 59 million ounces on the board, it comes from 7 projects, and 5 of them are in construction or in production today. And I think that goes to speak miles about the quality of ounces. I already touched on the cash position. Currently, we sit at 1.2 million ounces of inferred oxide, 700,000 ounces of potential. There's 776,000 at Wildcat, 700,000 ounces of potential at Wildcat, 476,000 at Mountain View. It's a blended grade of 0.47 and a 1.1 strip ore to waste ratio. We also get a really interesting exploration story called Red Canyon. It's 22 miles south of Cortez, which is one of Barrick's largest deposits. It's a Carlin-style system and has the potential to be something truly world-class. Dune, Eden, and Mar are low sulfidation epithermals, a lot like Mountain View and Wildcat. They're really part of our growth portfolio of assets. And the reason people ask me, like, you have so many assets, and they say, well, think of me as a portfolio manager. Do you invest in one company or do you invest in multiple? And the way we hedge our risk in such a risky business is having multiple assets at different stages of the exploration curve. I mentioned to you, we have a really tight share structure, and we'll be putting over 20,000 meters into the ground across Mountain View, Wildcat, and Red Canyon. Quickly, as a millennial and as we build our brand, I think it's fundamentally important when we're looking at attracting new investors and us as the next generation of mine builders or finders. I think it's on our onus to think about tomorrow today and being advocates of the environment, having a strong social and governance perspective, and really change the narrative of our industry, because let's call a spade, it doesn't have the best image when you're looking at other industries. And I think it's on our generation to really drive that message home that, millennials think eggs come from the fridge. Well, they don't. So driving that message home is one of the fundamental core values we have at Millennial Precious Metals. Quickly, from a catalyst perspective, as you mentioned, we just went public. We're up about 15% from the open at 50 cents. We initiated our drill program. The Red Canyon program is just complete. We'll start releasing results in the next couple of weeks. Mountain View starts next week. That's why I'm here in Nevada and I don't have a suit on. I like to get my feet dirty. It's a 9,000 meter program starting next week. Then we'll move on to Wildcat. Those programs will then feed the updated resource for Mountain View and Wildcat. We'll initiate the Greenfields programs at Mar, Oslo, Eden, and Dune. And the resources will then feed the PEAs. And one thing I've learned from the past is when you're doing exploration, we're already working with engineers to do the met work, to do the rock mechanics, so that we're not wasting holes and we can go straight to a permitting perspective, because I think there's a lot of people that believe in Nevada that there's going to be a big roll up. And the only people that are going to get taken out, because it's happened to me 3 times now, are the people that have a clear track record, a clear track to permitting and to production. With that, I think I kept it around 5 minutes there, Deb.
Well, thanks for the overview. And I'm interested in hearing more about the ESG stuff. And I know that's going to be a big topic of our roundtable later. So appreciate the overview, Jason. Look forward to hearing more about some of those endeavors. Up next, we have another Nevada exploration story, which is new to us. We just met Cherie last week, but her chairman of the board is a friend of ours and somebody that's done a little bit of work with Adelaide Capital, Craig Perry, who was kind enough to make the intro. So Cherie, thanks for joining us.
Thank you very much for having me.
And so Cherie's CEO of GOLDBULL Resources, and looking forward to hearing about what's going on with GOLDBULL in Nevada.
Yeah, I look forward to sharing it. Thank you, Deborah. I'm just trying to share my screen. So welcome to GOLDBULL Resources. Our company is relatively new. I co-founded it with Craig Parry and Mike Connor last year, and it's entirely focused on gold projects in Nevada. Currently, our market cap's only about $30 million, and that's really underpinned by the almost 500,000 ounces that we have in the ground at our SANDMAN project. And SANDMAN was essentially our listing asset. We purchased it from Newmont last year, and it was one of the first Newmont divestments that's been done in this state for a very long time. Our mission is to grow into a mid-tier in Nevada. We see massive opportunity here. I've been living in Nevada for almost 6 years, and during the course of that time have appraised hundreds of projects and have come down to about a handful, which we have our eye on and which we're currently in negotiations for to really add to our portfolio. So our growth strategy is very much twofold. Exploration success is one half of that, and also additional acquisitions. If we can acquire it cheaper than we can explore for it, then we'll go for acquisitions. We're listed on the TSX, the OTC, and also in Frankfurt. And further to our last presentation, ESG is a real core value of our team, and I think our generation is doing things a little differently. And this commitment and these values really underpin everything we do at GOLDBULL. And the majority of our team, all of our executive management team, are either ex-Rio Tinto or ex-BHP. We've got a track record of discovery, and we intend to do that again in GOLDBULL. So Craig Parry, one of my co-founders, is our chairman, and we're further supported by a wonderful team of mine finders. Dave Johnson's actually a geophysicist, which is a little bit unusual to have a geophysicist in the VP role. However, that really illustrates that we think most of the major discoveries in Nevada are going to be undercover discoveries, and geophysics is going to play a vital role in that. Supporting us, Regina Malloy and Gavin Cooper, and although the company's new, I've worked with Craig and Dave and Regina for almost 20 years. Craig and I go back to Rio Tinto, and Dave and I back to Lion Ore days. Our board is further supported by Walter Coles, who's doing an exceptional job at Skeena Resources, and Skeena's basically done something that I'm hoping to replicate in packaging up SK Creek and Barrick's non-core assets, and that's just flying at the moment. Our advisors also, just those three advisors, we've probably got 100 years experience there. To have people like Keith Peck available to us in Nevada. We've got Randy Vance and Keith Wood advising us on geology, Debbie Strusaka is our environmental government relations advisor on the ground here in Nevada, and Mike Connett's assisting with the PR and IR aspect in Canada. So SANDMAN is certainly our current focus, and it's where the majority of our funds are being spent. We've just completed a 3,500 metre drill program there, and we're about to start another 5,000 metre drill program at SANDMAN. And at SANDMAN, we were lucky. We've got over $20 million worth of data when we purchased the project from Newmont. A lot of that is fantastic quality work that Newmont did, and then we've also got some 80s and 90s data that we're also still incorporating in our data room. Another massive positive of SANDMAN is that it's already permanent under a plan of operation, and that plan of operation just enabled us to hit the ground running the day it was transferred from Newmont's name to GOLDBULL's name. We had an excavator on site putting in drill pads, and we were drilling a couple of days later. So SANDMAN's a real one to watch. We didn't buy SANDMAN because of the 500,000 ounces that's sitting at the surface already. We bought it because of the exploration potential that is located between the outcropping geology. The majority of the project is covered by sand dunes. Unconsolidated sand has obscured most of the geology. It's located, less than 25 kilometers south of Sleeper, which was an absolute gem discovery, super high grade little deposit. So if we can find another Sleeper, that's our goal, and that's what we're working towards. And our focus most certainly is exploring undercover where there's never been drilling before. And the bulk of the drilling that has been done in the past was to a depth of 100 meters or less. So there's certainly also potential to increase our existing resources at depth. I won't get into big boards in a lot of detail. However, I was one of the people that identified big boards as being a world-class exploration target. And it's a project that's located on the junction of the Carlin Trend and the Bida Trend, located 10 kilometers to the west of Bald Mountain Mine, operating asset by Kinross. And astonishingly, this was open ground and it's never had a drill hole. So we staked it and we vended it, and it was one of the again, one of the formation assets of the company, and we will most certainly be drilling big boards. However, SANDMAN's a current priority, and we'll get onto big boards later on in the year. So as I mentioned, we've just finished 3,500 meters at SANDMAN, and these are some of the kind of stellar numbers that we have intersected. Really high grade gold numbers from relatively shallow depths. Able Knoll, we've got 4 small resources at SANDMAN currently. Able Knoll is the only one that's not sticking out of the ground. However, when you look at those numbers, you can imagine that it's probably not going to be in the ground forever. Those 3 grams a ton over 140 meters, for example, so close to the surface. A majority of this is oxide, and very exciting, very mining friendly part of the state near Winnemucca. Again, these are some additional high-grade numbers that we've announced recently from SANDMAN. Historically, the focus was very much on at surface, relatively low grade, 0.5 to 1 gram a ton heap leach type oxide material. And there hasn't been a lot of focus for the high-grade feeders. So we're going in there with a different approach. We're going in looking for where this mineralization is coming from, following these high-grade feeders, relying heavily on geophysics. As I mentioned before, we're doing a lot of 3D IP, SAMP to drive our drill program. So that's the company in a nutshell. We're going to be aggressively exploring, conducting early stage exploration at both SANDMAN, where our existing ounces are, and also at our big boards projects later on in the year. And we're looking for world-class discoveries. We're looking for multi-million ounce assets. And in addition to our aggressive exploration activities, we're also on the hunt for more assets with a Nevadan focus, looking to basically roll up assets where we can buy the ounces for less than $10 an ounce. We think that's a pretty compelling value proposition.
That's great. Thank you very much, Cherie. Really interesting project. Really looking forward to hearing about the geophysics that you're running, because I know that's a key part of your story, and I think we'll get into that in the discussion around new exploration techniques. And so yeah, looking forward to the roundtable. Staying on the Nevada theme, we have another company that's a gold exploration story, sometimes silver, but mostly gold.
For a little bit of both, thanks.
Chad Peters, CEO of Ridgeline Minerals. I make that joke because Chad competed in our silver pitch contest a while ago. And actually, I think you came in third.
I lost, yes. Thanks for bringing that up as well.
Not bad for a gold story, though.
You did all right, yeah. So, go ahead.
Yeah, give us a 5-minute overview of Ridgeline.
Sure. Well, thanks for having me. Really appreciate you guys bringing me on again. So, Ridgeline Minerals, we are a Nevada-focused gold explorer. We do have a really exciting silver asset that's coming together, so we're definitely running with that as well. But we have 120 square kilometers across 4 projects in the Carlin and Battle Mountain Eureka trends, and not unlike Cherie, we're looking for multi-million ounce discoveries here. So because we have 4 projects, it is a little difficult to cover them all in 5 minutes. So what I'm going to do instead is, just like the rest of my peers here, we're new to market. We're trying to set ourselves apart in a pretty crowded space, so we're like to think we're doing things a little bit differently. So I'm going to focus more on that today. But I do encourage anyone that likes the story, please go to our website at ridgelineminerals.com. Check out our Verify model. You can go through, get into the weeds on the geology, spin everything around. And I think you'll see that we really do have a pretty special portfolio and some core land positions. So moving ahead, here's our disclaimer. So, why exploration done differently? That's our tagline, but does it actually mean anything, right? Well, I'm Canadian, focused on narrow vein gold discoveries back in Canada with Premier Gold Mines previously. And I moved down in 2012 to Nevada and was just fascinated by the geology. So after about 8 years down here, I realized there was tons of exploration potential, but it was undercover, it was deep, and it was going to take some new thinking and innovative exploration techniques to actually make new discoveries moving forward. So in 2018, I founded the company out of my garage. That was fun. My wife wasn't able to park her car for about a year in there, so she still gives me trouble for that. But we founded the company with the core belief that the next generation of those discoveries would come from those deep drilling and mature districts. But the reason those discoveries weren't being made is it's expensive to do so, and it's incredibly risky. So how do we offset some of that risk to our shareholders? Well, the first step, I co-founded the company with the owner of a drilling company. So he came in, Steve Nielsen, my partner, and he took a founding stake in the company. And in return, we got a strategic drilling contract for 3 years or 15,000 meters, whichever came first, at a 60% discount to market rate. Now that meant that we could operate at a lower cost. We had guaranteed access to drilling, and it meant shareholder money went in the ground early and increased our odds of making a discovery. And it's already working for us. So we've announced a new silver gold discovery at our Selena project, which is actually looking very exciting. It's a shallow oxide play. And then on top of that, we have some deep, really high potential projects on the Carlin and Battle Mountain trends that we're going to be drilling this year that have a lot of potential for major tier 1 discoveries. So the next thing that came with our exploration done differently philosophy is that systematic exploration, right? And there's a lot of really great young companies that are doing just this right now. The geology has to come first. So we spent the first 2 years of the company building out our geologic models, collecting all of the baseline data. It's not sexy. It doesn't necessarily blow people's hair back, but it's what makes it's what drives discoveries. You need to understand the geology. So we're very focused on the systematic approach. And we spent the first 2 years putting those stories together. And then we went public into a stronger gold market with these projects ready to drill within a strategic drilling contract set up and ready to go. So on top of that, we've built out a great team of experienced gold explorers in Nevada. And, just to highlight a few of them, my vice president of exploration, Mike Harp, he was the lead geologist on the discovery of the North Stark Star discovery for Gold Standard Ventures. That's turned into a combined 5 million ounce district for Gold Standard. We have technical advisors like Mac Jackson, who was part of 20 million ounces of discovery in Nevada with Newmont. Lou Teal, again, worked with Newmont. Tons of discoveries, over 20 million ounces as well. So we're talking about a team that has over 30 million ounces of combined discovery in Nevada across 10 different deposits. So this is our backyard. We know what we're doing. I live down in Nevada, in Winnemucca. So, this is, a really exciting time to be in exploration in Nevada. And I think there's going to be lots of new discoveries. So, one of the things that I noticed when founding the company is, one of the most dangerous phrases in mining is, well, this is the way it's always been done. And if I had, $1 for every time that had been told to me in the first 2 years of the company, I probably could have gotten away without a seed round financing. So, we tried to, there was lots of folks that tried to change our approach to exploration and building the company. And we stuck with our approach. We stuck with that vision, and we've been able to maintain a strong share structure while also building out one of the leading land positions in Nevada by any junior. So on the capital structure side, we own 15% of the company, our management team. I personally own 6.8%. I put in $150,000 of hard cash into all of our financings over the last 18 months. We've raised about $14 million, but we've been able to retain a very strong capital structure. So 55 million shares outstanding, 69 million fully diluted, and we have a cash position of about $5.8 million Canadian. So we're well funded for the next 2 years. We have strong institutional and retail investor shareholders that have supported us right from the start of the company. So we really tried hard to focus on just sticking to our focus, which was managing our dilution, taking care of our shareholders, myself being the largest individual shareholder in the company. I wanted to make sure that we mitigated risk and increased our odds of making discoveries. And it's working well for us so far. So what does all that mean? We have 4 projects. I've been talking about them. We have Carlin East and Bell Creek. They're only 3 kilometers away from the Leeville mine and the Goldstrike mine, 2 of the largest gold mines in Nevada. And then we have the Swift project, which is only 7 kilometers northwest of the Pipeline mine, which is a 20 million ounce Carlin type discovery. So we've gone into these old districts and we've reinterpreted some core land positions that actually were dropped out of Barrick and Newmont's portfolios respectively and written off as low priority targets. And we've actually reinterpreted those geologic models, added value, and shown that these things have significant potential. And so we're hoping to come in this year, do some really high priority drill programs at both projects. And we're hoping that we can come out with a new discovery. In the meantime, we've actually been drilling our Selena project, which we hope to finish this week. That's a shallow oxide silver gold discovery. You don't see much open pit silver deposits in Nevada, silver specific. So this is a really interesting project that, to be honest, I didn't even look at picking up when we were acquiring our land package back in 2018. And the EMX guys that we acquired it from, they said, you can never have too many oxide projects. And so we brought it into the portfolio, and it's actually turned out to be a really exciting story. So we'll see where that goes this year, but we have pretty high expectations for that project as well. So without, I don't think I'd be allowed to to finish off without at least showing kind of one of our projects. And I really want to highlight our Carlin East project, which we're going to be drilling. We're actually starting up next week after we finish at Salina. And just look at this location. We're directly on trend of the Leeville mine. This was written off in the 1990s as too deep and, you know, the wrong host rocks. We were able to pick this up as a private company. We've doubled the land package since we picked it up. And we actually had Barrick make a new discovery only 3.5 kilometers to the south and on the exact same fault zone, the Four Corners fault that cuts across our project. So they announced that discovery last year. And they're drilling world-class intercepts, right? 23 meters of 32 grams per ton, 33 meters of 17 grams per ton. And they're continuing to step up that red line all the way towards the edge of our project. So we're going to come in, we're drilling 3 holes or 3,000 meters right across that same fault zone. We've been able to use a lot of the data that Barrick has released publicly to actually tune in our model and have even a higher degree of confidence heading into the program. So this is this project is 2.5, 3 years in the making, this drill program. And we're really excited to get the drills out there and hopefully announce a new discovery this year. So that is all I have right now. I think I'm probably out of time. So like I said, I'm actually going to put my personal email in the chat function. So if anyone has any additional questions, please reach out and hopefully I can answer them for you. Thank you.
Thank you, Chad. Great presentation.
Thanks.
All right, next up we have Cole Evans from Enduro Metals.
Can you see and hear me okay?
Yeah, see and hear you.
Perfect. Thanks,
Yeah.
Vanessa. So I got explicit instruction to make sure my mic and camera didn't come on until the moment. So I don't actually know how to turn it on here. Okay, perfect. So my name is Cole Evans, the CEO of Enduro Metals. I'm a geologist, as I always say, before anything else, though, and got into the business and investing side as a result of that. How did that happen? I knew nothing about mining. I knew nobody in mining, geology, anything like that. I grew up single mom, bought me a book about gold and silver and 5 1-ounce bars of Scotiabank silver bars, and from that point on, I was hooked. A little bit background though before I get into enduro. How did this come to be? I have a private company as well. It started in my basement a number of years ago. Managed to get a $60,000 loan for it. Since then, we've myself and our COO Dylan Hunko, we've grown it into a fairly successful exploration services company. We've done tens of millions of dollars in projects right from your mom and pop explorers to some of the largest mining companies in the world. And that's how we got into this Enduro Metals, the Newmont Lake project. I'm going to do mine, like I said, for the sake of time, a little bit differently here. Forward-looking statements. We're just going to go right into the project because, frankly, that's all that's important. If you don't have a good project, everything else is just fluff. So the Golden Triangle, this is where we are. We're up in northwestern British Columbia. We have 640 square kilometers, one of the largest land packages in the area. For those who don't know the Golden Triangle, I'm not going to get into it for the sake of time too much in here, but there's been billions of dollars, this is Canadian dollars, in infrastructure investment over the last 10 years. Well over 200 million ounces of known gold resources in the area, one of the most prolific mineral districts in the world. Like any geologist, you start with a question. And this question started for me almost 3 years ago now, where we were looking at data in this area. We've worked on over 3,000 square kilometers within northwestern British Columbia, and thought to myself, okay, we look at the Golden Triangle. You can traditionally break it up into these 5 individual camps that all have, tier 1 world-class deposits in and of themselves. And there was this spot here, this geological void. In why put the total meters drilled here? It comes down to a simple question. Our equal area had less than 30,000 meters of drilling into it at the time, where you can see all these other ones are now today well over 1 million in and of itself. And it's a simple premise. If you don't go looking for something, you're never going to find it. And keep that in mind as we talk. Why is the simple way to sum it down to. Like I said, being a geologist before CEO, this is going to be my next slide into it. And so we identified, okay, here's this. Is this the Golden Triangle or the Golden Donut? What's going on here? And one of the first things that we looked at is, okay, well, what's going on with the rocks? They're the right rocks that we want that are forming all these deposits over here. There's 5 mineralizing events in the Golden Triangle, so I'm not going to show them all, but you're going to have to take my word for it. There's all these world-class deposits over here, and there's more up here, Is this a donut hole? Or no, it represents avoiding the geological data. You're not going to find something unless you go looking for it, what we already talked about. So this is the property in and of itself. It's all about scale for us. We're here looking for copper, gold, porphyry systems. This is elephant country. We're not interested in 500,000 ounce gold quarries. This is big scale for us. That's what we're here to do. And we spent a couple of years doing our homework to get there. What do you notice? These big porphyries, there's a common theme throughout the whole area, and you want to look for these large magnetic features in these structural locations. That's putting it quite plainly. But sure enough, when we started doing that, what did we start seeing? For anyone who knows about these kinds of deposits, Red Chris, Galore Creek, Saddle, Newmont just bought 6 weeks ago or something like that for about 460 million. These are what these things look like. These are arguably the most sought after deposit types in the world. I'd be comfortable arguing anyone on that, in fact. But yeah, the big scale, and to put the scale into perspective, and this is not a geological comparison, though there is a lot of geological similarities. If you were to simply take Newmont Lake and move it just southeast along that corridor, so to speak, that I showed in the previous slide, you would fit Kerr, Sulphurette, Mitchell, Iron Cap, Snowfields, Bruce Jack, Treaty Creek, and Eskay Creek, all within the same property frame. Well over 100 million ounces of gold resources in multiple projects. So like I said, that's not a geological comparison, but to put the scale of what we're looking at into perspective, I think that's really difficult to do, but important. With that, we break it down into 4 main systems. There's hundreds of mineral occurrences. You're never going to be able to talk about them all, but you can group them into 4 like systems. One of the main alkaloporphyry ones is this Burgundy 72 trend. We're the first people to ever go in here targeting the hypogene mineralization. What's that mean? It's the source, the milkshake to the whipped cream that sits on top. That's the easy picking, so to speak. And like I said, we're making brand new discoveries. Here's an example. This has never been drilled in human history. 37 meters, 1.3% copper, 1.5 grams gold, 23 grams silver, and nearly 3% zinc on surface. We've got lots of examples of these sorts of things. One of the things that's made us fairly successful in going to these spots where nobody's looked before is using new technology. We're really big into that. One of those is hyperspectroscopy. We're by no means the inventors of this, but part of what's made us successful in the private business side is we've come up with ways to apply it that traditionally have not been done before. This hyperspec is well used by major mining companies and starting to by juniors, but it's incredibly expensive, and it creates mass amounts of data that the large majority of junior explorers simply do not have the either talent or capacity to be able to process. So we found a streamlined way of how to deal with that. I'm going to leave it at that, so we don't want to give out too many hints as to exactly how we do it, but just show you guys the results. So that's one of our main areas we'll be drilling in 2021. Again, another untouched target. Sometimes, as one of my old bosses would say, it's as simple as rusty rock and infrastructure. So in ode to him, this would be one of those things. We're about 18 kilometers from a hydroelectric power plant, and sometimes as simple as big Gaussons on the side of the mountain. This is one that we're quite excited about. The geology is unlike anything we've ever seen, frankly, in Western Canada, and we've been looking high and low to find some comparisons to make, but they don't seem to exist. But what does exist there? Incredible copper silver grades right on surface. Again, for those who love geology and science in the crowd, you might recognize some of these textures from some of these things. But it ties back to big scale again. These targets, that's 1,800 meters of over 1.5 grams per ton silver in the soil. Again, for those who might not be familiar with what that means, I encourage you to go out and look at some other projects, look at the intensity of targets that are being chased, and then compare it here. In my opinion, you'd be hard pressed to find these sorts of things elsewhere. This is another one of our other areas that we've been drilling. Of course, I've been talking about all this blue sky stuff, what's going on. No, of course, we've been drilling there a little bit over the last 2 years as well. Here's a summary of some of the results that we have in this climb on area, the third area of 3 of the 4 on this project that we've been focused on. You know, some great results in and of themselves, particularly as we move out to the northeast. This is one that we got this year, just under 9 meters of about an ounce gold, with some fairly significant copper byproduct. We still yet to, or we will be following up on that in 2021, but not necessarily our number one focus. Like I said, we're not looking for a 500,000 or 1 million ounce gold quarry. We're here to find the elephants, and we'll either do it or die trying, I suppose. A little bit, I don't think I have any slides on it, a little bit on the share structure, not as we were talking about a 45, 50 million market cap company, depending on if it's a good day or a bad day. I'm the largest shareholder of Enduro Metals. I've invested over 2.5 million Canadian in cash. In keeping to the theme that is significant for me, being that I, like I said, started out from $0, or that investment's 5x the value of my house. Another way to put it. And our second largest shareholder, we're really fortunate to have support of a gentleman, Rob McEwen. He's our second largest shareholder, along with some other mining people, as I would put it, that have been very, very generous to us in supporting this project through the homework due diligence phase, and to get it to what we're focused on for 2021. That's, we're going to drill more than we drilled in the last 2 years combined, and it's going to be focused on what we believe we've figured out, and that's the big scale discoveries, the kind of things that people aren't really finding much anymore. It goes back to that early question we had. It's there. You just got to go looking for it.
Thank you so much, Cole. That's a great presentation, and yeah, we can get into some more details in the roundtable. So keep on, Cole, but mic off and camera off whenever you can, please. Thank you. We have Dustin Perry from the field, also in British Columbia, not the Golden Triangle. So welcome, Dustin. You guys came out of the gate on the TSX Venture, rang the bell a little bit later, but the actual trading date was in March. Was it March 19th-ish? 21, something like that?
March 18th.
March 18th, thank you. And KFR is the trading symbol.
Okay, so before I go any further, I'm definitely making forward-looking statements here. I'm a geo, and I'm very optimistic. So Kingfisher Metals is a company I founded along with Dave Loretto. We're both geologists. So we founded this company beginning of 2019 and got it listed this year. The focus for this company was to explore BC for a discovery, but instead of exploring for what I've spent a lot of my career exploring for porphyry coppers, we decided to look for deposit styles that are less that really just haven't been looked for as much in BC, and those are organic gold and volcanogenic massive sulfides, and they exist in BC, and there's some really good examples. So SK Creek is a VMS deposit. SK Mining is exploring around SK Creek and really proving that potential that or the thesis that you do get VMS deposits in clusters. And then Barkerville and Braylorn are 2 of the more exciting development projects in BC right now. So what we're looking for is well known in BC, but we're looking in a few different locations. And Gold Range really is our focus this summer. That's where I am right now. So I'm about 2.5 hours west of Williams Lake. Beautiful weather here, probably high 20s today. And the Gold Range project has never been drilled before. We're putting 5,000 meters into it this summer. So with all that in mind, I touched on the commodities we're looking for, copper and gold, but we put together a really excellent team of highly technical people, but then also some strong capital markets professionals as well. Alex Langer spoke earlier. He's actually involved behind the scenes because we did the RTO with his shell. But what we really brought was a technical focus. We recently added Charlie Gregg to our technical advisory board. Greg Willard, who's also with Sierra Madre, is on our technical advisory board. But myself, I've been a geo in BC for about 14 years now, and our VPX, Gail Febo, well-known geologist in the Golden Triangle. She did her master's on KSM, and she's been published in economic geology. on porphyry copper in that area. But the strength she has that is critical to our company is structural geology and motivation. Last summer, she was out there at our Gold Range project, 5 months pregnant, mapping some pretty steep terrain, and did one hell of a job uncovering a system that we believe is the next discovery in BC. So to do this, we built this team. We have a strong cash position. This morning, we closed a $4.6 million flow-through financing. So now we're sitting with approximately $9 million in the bank. We're spending about $4.5 million this summer on all 3 of our projects, but primarily at Gold Range. And everybody else has already touched on this, and I'll just note it again that we are committed to operating in a sustainable manner and really early engagement with all the Aboriginal and local stakeholders that we're working with. So I'm not going to get into this in too much detail because I'm going to try my best to keep it at 5 minutes. But our current market cap is just shy of $40 million. We did our IPO at 25 cents, came out the gates on the 18th of March without a hangover at 100% up approximately. And we've been around that since. Some of our shareholders who came in on the IPO and have come in again on a recent raise include Crestcat, Commodity Capital, and EMX. I'm really proud of our EMX investment because we did not give them a royalty, and that's a pretty rare thing for an equity investment, especially at this early stage. And it does really speak to the quality of our projects, our drive, and our technical team. Before we move on, I will give a shout out to Tim Graham, banker at PI, who's probably listening. Thanks for getting the financing done while I was in the bush this morning. So the real focus here of this talk is short. I'm going to talk about cloud drifter trend. That is the anomaly on our Gold Range project that we are drilling this summer. And it's without a doubt the most exciting project or anomaly I've ever been a part of, and one of the best I've seen in my career. A good example of that is we drilled 60 meters with a backpack drill, which is a little man-portable drill last summer, and one hole that was 6.9 meters long from surface drilled 10.84 grams per ton. This has not been drilled yet. There's a historic anomaly that we went and confirmed and refined last summer that has 50 samples over 1 gram per ton of soil. This is kind of unheard of. If you want to see some comparisons, I urge you to go to our previous news releases. All of our technical news releases have associated presentations where we've actually gone further and reviewed that data in YouTube videos. And you can see some side-by-side comparisons of how this anomaly compares to, say, Coffee or Barkerville, White Gold, even Saddle, which the Saddle South is not an organic system, but they had a lot of success drilling a big anomaly, and that's what we have here. So all grades up to 22 grams per ton. We took a lot of rock samples there last year, over 300 rock samples, averaging over 6 grams per ton. So this is a really serious anomaly, and mineralization is at surface. We don't have an exact analog for this. Our closest analog what we're seeing so far is Donlin, which is a great analog to have, but until we drill it, we're not going to call anything too much. This is the anomaly though, and a lot of people talk about technology, but one thing that we did here, which is it has nothing to do with technology. This is 100 million years ago technology, is digging holes. And this is something that we did last summer. We went into the bush to these high grade soils, which are borderline ore grade soils, and we just dug holes. Nobody had done this before. I urge geologists to go do this because if you have good gold grades, you'll probably find something underneath it. And that we did. You can see in this photo here, that's me in a pit. Those are 9 gram samples. It's a 9 gram per ton sample. So that's what we're doing. There's people out there right now. We actually got a backpack drill drilling, I believe, really close to this sample. And we're going to put a bunch of holes into this, 5,000 meters of shallow drilling, so 15 to 20 holes. It's going to be an exciting program, and that really is the reason to get into Kingfisher right now. But in addition to that, we've got 2 other projects. So we also have our Extol project, which was our listing property. It's a 49-kilometer VMS belt with some very impressive grades. Over 40 targets were outlined by a 1,500-kilometer V10 survey we flew in 2019. That project was previously worked by Falconbridge and Noranda. It's right near the $40 billion Kitimat LNG project. It's on the shipping lane to Asia. It's got a hydro facility at the north end. We will be working that up in the background and having it ready to drill next year. Tibbert, our third project, covers a major crustal scale fault with 200,000 ounces of placer production coming from that area. So these are all really strong projects with a strong geological foundation for them. They're not area plays. We are essentially first movers in these locations. And I believe the discovery potential here is about as good as it can get. So these are the opportunities. I urge you to reach out, contact me. It's Dustin at kingfishermetals.com. Always make myself available. I am in the bush right now, but we do have internet, and hopefully the internet in our camp will come back on tonight.
So it's the roundtable time. If we can ask all the other participants to please turn your mics on, cameras on.
One of the things that Rick kind of alluded to that's important to me and our team at Adelaide Capital is the people that run the companies, the people that back the companies, and I'm not a geologist, so hopefully you don't lose me in the technical part of the conversation. But the first thing that I do when I look at a presentation is I go to the management board, and if I don't know anybody, I'm like, I don't know what to do. Like if I know somebody, it's either a yes or a no instantly. And it really is about the people that put the companies together and the people that run them. So you're all here for a reason because you're in the yes pile. So it's been a pleasure to get to know you all and your stories as well. I think that we wanted to start off with a technical question, Vanessa.
Yeah, I was canvassing around while we were planning this. And hello, Rick. Nice to see you again. Thank you for joining us again.
Nice to be back.
Really, thank you. We want to know, and some of you touched on this, but let's go around the group and find out what different methodologies are you using and how are you employing them? Do you want to start first, Dustin?
Sure. I would say that we're using what is currently the most underrated geological tool, which is high quality geological mapping. High quality structural mapping, don't waste money on anything else before you've mapped it. That combined with prospecting. We thought of doing airborne surveys or airborne magnetic surveys on parts of the project and decided not to because it was cheaper to go map and prospect those areas first. So it's not that advanced of a technique, but it requires a really good geologist, and it's really important.
Sorry, slow on the draw there. Thank you, Dustin. Next, Cherie, would you like to?
We don't have the luxury of outcrop like Dustin, so mapping doesn't really help us. So we're really relying on geophysics, and we've found a couple of techniques working better than others. In particular, the 3D-IP and the CSAMT are just really lighting up what we want to see. And we're combining that with some lag sampling of float that we're finding around the place. So almost like an Australian approach to exploration in Nevada. And we're also not adverse to drilling for the sake of geochem so we can see underneath the cover.
Fantastic. Yeah, I listened to one of your videos, and I was involved with a project in Australia, and the cover was quite a geological, added some complexities. So
right.
Thanks for that. How about Chad?
Yeah, we're doing similar to Cherie's team. We have a little bit more exposed rock in the ranges where we are. So we're doing the baseline geochemistry, the geophysics, the mapping, and then we're just trying to tie it all into a comprehensive geologic model, right? So we have I'm lucky. I got a young guy that's a geo, and he's an incredible leapfrog modeler. So we're doing real-time adjustments, whether we're drilling or mapping daily. So and we also use an XRF so that when we're out in the field, we can kind of hone in on what the geochemistry is showing us in real time. So that's what we're trying to do.
Okay, thank you. Let's just orbit around Nevada. Jason, would you like to?
Thank you, Vanessa. I truly believe in going back to the fundamentals, and all this AI talk is really great. But at the end of the day, you have to remember garbage in, garbage out. And I could tell you when I went to Barkerville, and it looked like someone dropped a bunch of pixie sticks onto the table, and the orientation of the grill was scattered everywhere. And it took myself and Terry to take over 10,000 structural measurements and re-put the kinematic structural model by hand and mapping it on paper to understand these big systems. And technology can always aid you, aid you in your successes. And geochemistry, when you're looking for low solidation epithermals, having mercury, arsenic, antimony, and using CSEMT is great when things are undercover and mapping and stuff like that can't be done. But truly going to the fundamentals and using a systematic phase-based exploration model to de-risk these things, I think has completely been lost in our generation. And I am sure a lot of the CEOs here can attest that, go find a young geologist from university that knows how to use a Brunton and knows how to take S2 lineation or, stuff like that is completely lost. And I think it's on us to kind of bridge the gap from our mentors to the next generation to really bring that together and use technology to aid us. So fundamentals, long-winded answer then, I said.
Well, we're here to listen to everybody how they're approaching. Yeah. Cole, would you like to?
I have the last one. Sure. Yeah. Well, I think I've heard two words that are really important: systematic and empirical observation. It's important to understand what it is that you're focusing on. Grassroots exploration versus brownfields. Every investor wants to hear that the company they're investing in is using the latest in technology and this and that and trying something new, all these things. And yeah, that works, and particularly with the AI where there's a lot of talk. But frankly, I think that's a much better approach in a brownfield scenario. When you're in grassroots exploration, like I know a lot of these companies are, you can't replace sweat, hard work, and ground truthing things, but it's really a combination. With Enduro, I chatted a bit about hyperspectroscopy that we use quite a bit. We're quite into drones as well, aeromagnetics with drones, radiometrics. There's a number of things, and incredible what you can accomplish on a budget with drones. But it's combining that work with the detailed mapping, soil sampling, everything that I think I've pretty much seen from all the companies here. You've got to do all of it. It's a bit of a morbid analogy, but look to World War II, Bomber Harris, I believe, was you can't win a war from the air. You're not going to find a mineral deposit from the air either. And a lot of companies get caught up in that.
Interesting. Before we move on from the subject, does anyone want to reply to something somebody else said? Have an open conversation about some of the topics? I knew it, Dustin. You got to laugh in there.
It's actually unrelated. It's something that we have, our generation has access to that previous explorers didn't, and that's, say, somebody 30 years ago. Well, one, we've got 30 years of exploration behind us of history, but also I can't speak for the U.S. I've had a hard time digging up data from the U.S., but within Canada, everything's publicly available. You can digitize old reports. You can look through what people have done, how they've failed, how they've succeeded, and also compare your project to other projects using technology like GIS software. And that's something that we have now that we didn't have in the past. So it would be foolish not to use that data.
You're right, Dustin. The U.S. needs to get better. Like down here, you'll get an old project and some crusty old prospector actually has the data in his garage. And, he'll want $500,000 for 10 drill holes and some old soil samples, right? So having it publicly available would help the U.S. A long ways with grassroots exploration.
Yeah, I agree with you, Chad. And the U.S. has got to come a long way, especially from a staking perspective. It's ridiculous down here in Nevada. And I think one thing we got to remember too is that the data that's in the public domain, when you're doing soil samples, how do you know the geologist took the right horizon? That sort of stuff we got to also evaluate as well.
I like the staking down here because it's hard if you're up in Vancouver, it makes your life hard, but I'm 30 minutes from my project. So if I want to stake ground, I drive out there and I do it. So maybe I'm probably biased, but I like it the way it is.
I think going on from what everyone said, the fact that we've got all this data and now we've got softwares that are really easy to use to visualize in 3D, such as Leapfrog. It's pretty amazing that we can just plug all this data in and there we've got a 3D model, whereas before just conceptualizing that in your head is a lot more difficult than plugging it all into this software, which makes things a lot easier.
I just got a text from my geo. We're drilling our Selena project, and he sent me cross sections of antimony, arsenic, thallium, and mercury of our downhole drill, which we just finished the hole 30 minutes ago. So, yeah, it's incredible. It's changed a lot even in the 15 years I've been around. So,
and they're not having to wait 6 weeks for lab turnaround because of the portable XRF you've got at the rig.
We're drilling a follow-up hole because we like what we saw, right? Whereas otherwise you'd step out, you'd go drill your other 5, and then 3 months later you go, I wish I'd have drilled that hole. Mm-hmm. So.
All right, well, let's go on to, thank you everybody. First one, it's really interesting. Let's talk about the markets a little bit. And Rick, I thank you for being patient there and jump in any time. Do you have any questions?
I'm frankly enjoying listening. I've been talking so much the last 2 weeks, I'm tired of hearing myself. So I'm going to listen. I'm going to let younger, smarter people talk. All
right, sounds good. Let's see. Yeah, Alex. Again, when we were thinking about this concept, this event today, I know Alex. Your dad's with Canaccord, and you're capital market savvy. So there's so many facets going on here. Let's see. What is my actual question? Let's see. Capital markets. How you raise all that money, 15 million?
I mean, and structure too. I know we debated structure earlier, but Alex, we've seen 2 of your companies go public now, and just like the way that you set up the structure, it's clean, they trade well. Can you talk a little bit about how you structure things, how you think about it, how you set companies up for success on an RTO basis?
Yeah, absolutely. I think that's really important. And as you mentioned, Deborah earlier, that when I look at the presentation myself, I go straight to management team. And that's super important, one, but I think structure is also really important. If you don't have the right capital coming into these deals, it's going to be really difficult to raise the subsequent capital that you need to progress the companies even further. So that's one really important aspect I look for in companies I'm involved with or companies I'm starting, is making sure you have the right capital at the right stages as well. So there's early capital that wants to move on to the next stage. And then there's, smaller funds that come into the larger funds, and being able to kind of achieve and deliver on those goals all the way through is really important. And if you don't start with a good structure and you have, some hedge funds or things that are difficult coming in, it can be really difficult and can really dilute the company moving forward. What we're doing here is wealth creation. So it's all about giving opportunities to get high risk, high reward investments. And if you don't have, all your ducks in a row, including structure, it can really be an uphill battle. Some companies can still get through it if they have amazing results and, a great project. But if you don't, it makes things very, very difficult. So what I'm looking for is, and what I try to do is just have those right investors, give the companies a right opportunity. One perfect example is Kingfisher, where, they wanted to raise a bit of money. We ended up raising quite a bit more because their projects really need that. And now they have 9 million in the bank and can really properly test their targets. And without having the right capital, it could have been quite difficult.
I agree with that. And I mean, it's cheesy saying that the proof's in the pudding, right? You look at how cleanly your structures trade, and it's a pleasure out of the gate to work with you. I don't know if anyone else has anything to add on that topic.
Deb, I've raised.
Argue about this, Jason.
I've raised $37 million now, and from big institutions, and what we do is we use a delisted shell, but it's a reporting issuer. So you bring in your board lot and your distribution at your RTO level, so you have no legacy shell shareholders. So it trades super clean, and I think like Alexander said, is getting the right people in, and none of this quick money stuff. Rick, I'm not a warrant person. Deb and I had an argument on this via text earlier, but to each their own. I think if you're Steve Land at Franklin Templeton and he says, "Hey, I'm your lead order, but I want half a warrant," then you go, because I think one of the biggest mistakes junior companies do is, my share price is going to go higher, I'm not going to suffer the dilution at this level. Well, you know what? You're a junior company, you need money, and when the money's on the table, take the fucking money.
Hard to argue.
Yeah.
Well said.
Yeah. And to give kind of two perspectives on that of what Jason's saying, I'm a warrant person when I'm an investor. I'm not a warrant person when I'm the CEO of Enduro Metals and the issuer, right? So it all varies, I think, on your perspective. But yeah, take the money when it's there. I do it the old-fashioned way. Our last finance we did about 11 million non-broker, so we don't end up getting pressured as much. But yeah, it can be a problem.
I think there's a. Oh, go ahead.
I'm sorry, I was going to say Jason and I came to a truce on our debate, which is really you have to understand what your value in the market is and where the market's at. So if you're in a hot market and you can get away with it, like doing a private placement with no warrant, sure. But if the market's turned and you need to raise capital, you need to price it to sell. And so we did come to somewhat of a truce. You have to understand where you're at and where the market's at.
I think there's a place for warrants. Like when we were private, we were adamant that we weren't giving out a warrant, right? But we've kept the same shareholders from our 12-cent round are still our shareholders, our last 50-cent round, the same core people. And I think for the first two financings, you could arguably say we didn't add a heck of a lot of value, right? Like we went from 12 cents to 22 cents in a year. We just consolidated ground, did some soil surveys and said, hey, this looks great. So when we hit the 45-cent range and we had the same people coming in the door writing those same checks, it made sense to offer a well-placed warrant. It was an incentive, from that perspective. So if I can get away with warrants in the future, I'll absolutely do so. But I think there is a place for them in the junior market, and too many companies are undercapitalized and should focus less on, am I taking a warrant or not? Or am I funded enough to actually do meaningful work on my projects? And there's not enough of that, I think.
Yeah, and for the warrant side, I know Rick brought up a really good point in the intro there when he talked about a quick means of further financing. A lot of retail investors might not realize that costs that go in the legal fees and things with the TSX or whatever exchange you're on that go into these financings. It can be hundreds of thousands of dollars, if not more. So having the ability for the pro warrant side, as the CEO of Enduro, having the ability to access capital when you need to, particularly from your closest group, has a major advantage.
And somebody I really respect, he says that good structures, good people do things with good capital structures. So I mean, projects come and go, but when you know how to handle your capital structure, then I'm sure it gains the trust from your investors, right? I have an idea. Let's go around and each one of you, and I'm looking at my squares. Dustin, you're in my top left, so I'll start with you. What's your thesis, and how do you plan to test it with your projects, Dustin? Or you can pick. I know you have three companies.
So what is our exploration thesis?
Yeah, what's your exploration thesis? Say, pick Gold Range or X-Dot, say, and how do you plan to test it?
Okay, I'll go with Gold Range. Yeah, so we think there's a large gold system there. We don't exactly understand it fully yet. It has not been drilled. We've got, I would say, as good of an understanding as one could possibly have at this level, given the structural data we have and all the different layers of data we've acquired. But we see the signs of there being a large gold system due to multiple episodes of vein formation, a wide variety of metals that all collaborate with the orogenic gold model. There's nothing in there that would discredit the model. So the idea here is we need to drill it and then move forward. It's the first pass drill program. So, the hopes of fully understanding it prior to drilling, or even this summer, might not be there. But the goal is to hit gold over good widths at high grades. And we already did it in the backpack drills, so I think we can continue to do it this summer.
Okay, great, thank you. Cherie, your square is under Dustin's. Just going.
So our thesis would be twofold: to acquire or explore for multi-million ounce gold deposits in Nevada. And when it comes to the exploration front, we're very much focused on the undercover targets that have never been drilled and haven't done the rounds, and utilizing a combination of world-class geochem such as the lag sampling in conjunction with the geophysics, and then just drilling the things and seeing if they've got legs, and if they're not multi-million ounce potential, moving on to the next. And with respect to the acquisitions, again, it's looking at projects that, again, haven't been doing the rounds and have been, kind of in the private sector doing nothing since 1991 when the gold price crashed. And there's, 1 or 2 million ounces just sitting there that's been doing nothing at $1,900 gold. They make a lot of sense now.
Thanks, Cherie. Super interesting. Chad?
We're not unlike what Cherie just mentioned. We're going for big targets in Nevada. One of the things that we've really focused on is the old explorers, Newmont, Barrick, from the 1990s, et cetera. They all focused on shallow, mineralization in Nevada. So what we did is we actually went and looked at the throwaways from those big companies. Usually we kind of laugh, there's like a donut of neglect around world-class projects in Nevada. So you got the mine geologists at the mine. They're not exploring on strike because why would I? I got a 25 million ounce gold mine. The exploration geos all want to pretend they're like Dustin out on the top of a mountain with their hair in the wind, and that's the only way you make real discoveries. So those projects that are 2 to 4 kilometers away from the edges of existing gold mines, that's where some of the highest potential exploration in the world is in Nevada, in Nevada and or the world. And we focused on acquiring those types of assets, which have hopefully de-risk some of that deeper risk that comes along with the kind of drilling we're doing.
Excellent.
Yeah.
Excellent. Thank you, Chad. Alex.
Great. I think ours is a little bit different in terms of we're trying to consolidate an area that's already had quite a few discoveries, just no one's actually been able to put it all together and make it profitable. So what we're looking at is using our capital to acquire a number of these mines. A lot of these mines have been in production previously, whether it's colonial times or small family scale. So our thesis here is to use our technical expertise as well as production history and acquire these mines and then use a centralized facility. So using modern mining technologies for areas that have been discovered and of course, overlaying that with good technical data.
Sounds good. You've got your 90 years on the ground there.
We added 2 more recently, so we're well above that now. Yeah, we're well staffed out for more projects. That's one thing. We have now 9 geologists on staff, which is a bit more we need than for one project, but we'll be adding a number of projects and we'll be able to put those teams out as needed.
Okay, thanks, Alex. And Jason.
Yeah, Wildcat and Mountain View are very similar. They're low sulfidation epithermals. So right now in the chalcedonic low temperature cap, we're seeing clear visibility of 2 million ounces. That's great. 2 million ounces of oxide is great. And it can be economic, but the thing is with small mines, you still make mistakes that big mines make, and they could still kill you. So this year's thesis is really to look at the plumbing system that Allied Nevada never drilled. So commonly in low sulfidation epithermals, you got about 500 meters of vertical extent. So we want to drill them. So as we're infilling to do resource conversion, we want to drill the plumbing system to understand the geometry of what we're looking at. So we know, okay, it's only going to be this, let's walk away, or shit, it could be another Forte del Norte or something like that, and it could be truly a world-class thing. But, we need to understand the sulfides and the geometry of that. And then next year would be understanding the met on the sulfides. With Red Canyon, it's a Carlin-style system, lower plate Devonian rocks, exactly like you have in Cortez. The lower plates expose on the horse. Previous companies did all RC drilling. And where we're going to add value is we are using PQ triple tube oriented core, because what controls Carlin-style systems are these fault systems and then these reactive horizons. So if you don't understand the fault block kinematics and where these horizons are going, when you step out, you have no idea where to expect it. So we want to understand where we know the mineralization is so that when we step out later in this year, we have an understanding. And if we step out, I can guarantee you one thing, you will for sure miss. But at least we have other projects to do it with. But if we step out and it's there, shoot, we have a winner. But if we step out and we miss a bunch, at least we killed the project. And I think That's what geologists forget to understand, is our job is to kill the project. And if it lives, then that's great. Then we all make money together. But your job is fundamentally to kill it as soon as possible so you don't throw in capital into not the best projects, I'll put it politely.
Okay, thank you. Thank you for that. Well thought out answer. And last but not least, Cole, and then we'll get to the next topic. I think we need to make this into a two-parter, Deb.
I'll touch it on from the grassroots perspective, and I think the most important thing is don't accept the established dogmas that that have been used in the past. Right? If you want to find something different, you need to think differently. In the second one, by the way, everyone brought up all really good points, so I just won't repeat them. But the second one is you need space to explore, and a deposit, even a porphyry, really, and lots of these big projects only makes up of a postage stamp in the actual area. But it's about, unless you're really good at throwing darts, you need space to explore. You need space to find things. It's a giant puzzle. It's a really complex puzzle that's been shape shifted and turned over on its head over hundreds of millions or billions of years, depending where you are. It's hard to solve a puzzle that, one, you don't know what the final picture is, but it's next to impossible if you don't have all the pieces.
Okay, thank you, Cole. We have 4 minutes left according to my clock. So, Rick, Deborah, everybody, what should we do here?
Well, I think that to be courteous of Rick's time, we should let him do a little bit of a wrap up or give him the mic for a bit. But I would like to keep everyone, because I really wanted to ask about ESG.
Me too.
So if that's okay with you, Rick, do you want to take an interlude?
I'm particularly delighted to be excused before the ESG discussion starts up. I don't seem to.
I figured you might be.
ESG is important to me, but my idea of what characterizes good ESG seems to be consistently politically incorrect. I need to say that I like a lot of what I'm hearing here. I'm sorry that in the middle part of this that I had other duties that I had to attend to. What I particularly liked is the situation that I got from every explorationist, that they shouldn't try to employ necessarily the models that they learned in university or in their employer or in their former employer to the task at hand. One amazing source of failure I've seen in 45 years of financing exploration is that somebody tries to superimpose their model on the rocks as opposed to letting the rocks tell them what their model ought to be. A second thing that I really liked, Jason, don't take killing projects to its illogical extreme, please. I don't mind if you occasionally succeed. But one of the things that I really like to hear is this circumstance where once you've tested your thesis, don't continue in some vainglorious attempt to develop a new thesis unsupported by data. So many times in my career, morons like me will put up $10 million, and morons like you will completely disprove their thesis with the first 3 million, and then spend the last 7 for reasons that are completely beyond me, as opposed to pivoting and using it for something intelligent. I'm attracted to that. But I have to say, generally, I've been very impressed with the overall tenor of, I guess the old-fashioned phrase for it is the science that's been displayed here. So congratulations on assembling a great panel, and lady and gentlemen, very nice work discharging your duties. Thank you.
Thanks, Rick.
Thanks, Rick.
Thanks, Rick. Appreciate you participating.
Well, I must in fact leave. She who must be obeyed is demanding same. So thank you all.
I'm wondering how many attendees we lose when we switch to ESG. I don't think you'll be the only one. How to kill a panel in 30 seconds. So let's talk about ESG.
Thank you all
for sharing your wisdom with us and
Thank
your
you.
time. Appreciate it.
Thank you.
I jest, but we all know it's increasingly important. And I know a number of you have different initiatives. So let's talk about some of the new things that you're doing for ESG. Let's start with Cherie, because I know you've got a unique one involving birds.
Yes, sage-grouse is a hot topic in Nevada, and a couple of the projects that I'm involved with have a priority habitat. And at the moment, most companies go a credit system where you basically just buy credits of a ranch owner, and then you're free to go and disturb that area. However, we're really investigating a mitigation approach and working on projects that actually make a difference rather than just making a ranch owner rich. And we're all for conservation and preserving the habitat for this bird that's almost endangered. So we felt that rather than, we're going to spend the money anyway on the credits, why not actually spend the money on making a difference, a positive difference to the environment? So working with government agencies now to map out how that looks and what kind of initiatives that's going to be, whether it's pruning juniper or fencing priority habitat from wild horses and initiatives such as that actually will make a positive difference here on the ground. That's just a sage-grouse. I'm not sure. Maybe I can pass on to someone else, or happy to keep talking about ESG in Nevada.
Let's talk about the hunting season that they still have on sage-grouse. This
that is
endangered
insane.
animal. Yeah,
absolutely insane.
Don't get me started.
Yeah, we're also addressing that. I think that they will be limiting the hunting and bringing in some more stringent, I guess, procedures with respect to hunting the bird and having limits and having a lottery system. But it's just crazy that the bird's almost endangered, and half the people in the agencies that go hunt them on the weekend.
Yeah.
Well, speaking of hunting, we're actually, so Dave Loretto and myself, the founders of Kingfisher, we're actually both big hunters. And as everybody would know, the indigenous people of North America were hunters too. And that's one thing we're actually doing is we're sponsoring a hunting program that the local First Nations are doing here to try to get kids more back on the land. And so we bought them a bunch of equipment, and we're going to go out this fall and actually work with them. And I would actually hope that we'd be able to find some good people that will be good employees in the future, because hiking around with an animal on your back is not easy work. So they might be cut up for prospecting.
Yeah, Dustin, I'm with you on there. I hunter myself as well. In again, specific comments on the individual animals, I'm not too sure, but yeah, it goes into conservation. Hunters, in fact, a lot of people don't realize this, but from a worldwide number, are by far the largest contributors to environmental and conservation efforts in the world. And in second to that, and when you say finding good employees, as is British Columbia's terrain, topography, and remoteness in some respects, working with local First Nations hunters, trappers, outfitter guides is frankly one of the best things that you can possibly do. You get the local knowledge of how to move around, learning about there's a million different things, and even from a personal side, just a cool experience.
Agreed.
And ESG, as we know, comes in, I mean, there's so much to it as well. Just that in that facet, there are many different topics. So, we think about the people as stakeholders and the locals, but also the animals. So thank you for touching on that. Really interesting, Cherie, what your company is involved with. Alex, do you want to touch on Mexico and ESG?
Yeah, I can touch on the whole sector as well a little bit. I was previously CEO of a company that just did a RTO $100 million transaction with an oil and gas company that had a bunch of ESG rights in the US. So the market is there for it. So people are interested in it and they want it. RBC was the lead on it. We probably could have raised $200 to $300 million, to be honest. So it is really a big aspect that's coming forward. And a lot of investors, especially funds, social economic funds and things like that, social investing funds are really, really keen on. So more and more we're going to see that, and it's going to be an important part. What's great about Sierra Madre is we're in Mexico. So any type of ESG we do and we can do really makes a big difference to local communities. Mexico is great, has a clear framework of permitting and things like that, but you also need to have the communities on side. And as long as you're working with them and everyone's happy, it's jobs, it's such a big part of their economy. You know, people think of Mexico and tequilas and the beach, but mining is just such a big part of it. And so these communities have grown up around mining and they understand it, and they're really happy to work with the local communities. And you have opportunities to build a school or a hospital or roads, whatever that might be, to, you know, add to their quality of life. It's just wonderful. So it's really great to be part of mining that can, you know, bring that to these people.
Excellent, excellent. Last but not least, Jason, tell us about your ESG initiatives.
Yeah, I think we all touched on the brush and things that we do from the environment, but there's more to ESG than just the environment. And we have to look at the whole entire ecosystem that we all live in. And one of those things in COVID being a real hindrance on people's health, and me being an ex-CFL football player and having multiple concussions has hindered me as well. So, you know, some things we do is that instead of having a big closing party into a local community for mental health, and from a governance perspective, so keeping that good social governance in the local communities, and from a governance perspective, you know, let's say companies on the CSE and on venture aren't the most transparent companies in the world. And I think the important thing is really using a lot of the big board criterias for your governance policies and being uberly transparent. And I think that's something we can do better, a lot better. There's a new group that I just signed up with, Onion, that Dad led me on to. So it's basically quarterly reporting, which we will be doing from all aspects. And I think the industry as a whole has been somewhat doing this, but I think the problem is there's been, you know, bad apples in the group that makes us all look bad. And like, as I mentioned earlier, it's on the next generation, and that being us, to educate and advocate and really fend for change, to change the industry, so we can attract the next generation of capital. Because if we don't, a lot of the cash that we go for is going to dry up.
Thanks, Jason. That's a great answer. Oh, hi, Deb.
Hi. Yeah, I agree with a lot of what you've all said about ESG, and like I think that there's, you know, the social good, the community good, repainting the mining industry in a positive light, actually making a difference in the communities that you operate. There's a capital markets perspective of it that really shouldn't be lost, which is it's a huge investing theme, and there's a lot of funds that are set up with mandates that can only invest in companies that have ESG ratings, positive ESG ratings. So it is a real way to gain a premium multiple and differentiate yourself from the group. So I think I hate to be the one that like looks at things from a capital markets kind of nasty banker perspective, but it really is a way to define yourself above your peer group. So I think it's great that you're all looking at it in different ways and thinking about how to improve the world in which you operate. So that's nice. See, I'm not all bad, Vanessa.
You're wonderful, Deb. Let's change gears a little bit, and if anyone wants to talk about their mentors, that was something that I was curious about. Like, Dustin, I remember you told me once that you were hiking and I think prospecting with your dad as a kid, if I'm not mistaken.
No, he's definitely not a prospector. He's
he's not a prospector. Yes,
I'll chime in a sec. My computer's about to die. I'm not used to working where I am, so how about somebody else go on and I'll figure out how to get my computer charged.
Sure. Okay, at the very least,
I've been quite lucky myself, Vanessa, having mentors like Tom Obradovich, who is the founder of Forte del Norte, which was sold to Kinross. He really brought me on right when I actually stopped playing for the Eskimos. And I think you have different mentors in different stages of your life. And you know, Sean Rusin and Eric Sprott have been great mentors to me and really helped and supported me throughout my career. and Terry, Harvard, and Ruben from a technical perspective. That being said, I think you can find mentors in every aspect of life, even as a mine geologist. You know, as long as you're constantly listening and wanting to learn, you know, a guy running a jackleg can be a mentor, and he can really give you some really good insight that commonly an exploration geologist would never know. So I think, you know, mentors are everywhere. It's just, you know, making sure that you listen. But I've been very blessed in my career to have some very impactful and prestigious mentors. So I'm thankful for all of them.
Yeah, I asked Rick about his mentors, and he said he had many mentors over the years. So to your point, Jake, so yes, they're out there. And if anyone else wants to jump in, I know we're over time, so I want to respect everyone's time.
I was lucky to work with Ewan Downey and Steve McGibbon at Premier Gold Mines, so they were great. Found a lot of gold working for those guys, and then over the years got to know like Paul Stevens, guys like that in the capital market side that have been great to bounce ideas off of. And so I think, like Jason said, you got a ton of different mentors all over the place, and you always want to just kind of learn from everybody. You can ask as many questions as you can. That's what we've been trying to do.
Yeah, and I think one of the biggest mentoring things I've experienced is just a very key message. And I've met with Ross Beatty before. He was happy enough to give me some of his time for mentoring, and same with his former partner Tony Floyd. And the big key is think big. Don't mess around with small ideas. Always think big. You know, on everything within what we're doing, but specifically looking for deposits. Don't look for a 1 million ounce deposit. Look for a 10 million ounce deposit. If you find a 3 million ounce deposit, okay.
Yeah, and speaking to, I feel the industry in a whole, as was mentioned before, mining can have a bit of a bad rap sometimes. But you know, coming from my perspective, when I got started, like I said, I knew nobody. I had the definition of zero connections. And it is incredible how generous the older generations are in this business with their knowledge and their time. If you just simply go around and, you know, knock on doors, either sometimes literally, but yeah, it's amazing what people are willing to share with you, and in the time they're willing to invest in you. And frankly, if I didn't have that, there's so many people. The one name I would mention though is Jim Oliver. He was a former chief geoscientist for HDI, incredible human being, among many other people. But that name I would mention. If it wasn't for those people, there's no way that we'd be doing this, and Enduro Metals wouldn't exist.
Cherie or Alex, do you have anything to add? We're going to wrap it up.
I agree with a lot of what's already been said. I have multiple mentors, you know, like, I don't know, dozens. And I still call on the mentors from for example, my first job as a geo, boots on ground, David Hutton and Mark Bennett from Lionor. You know, they're two guys that I learned from in my first job and continue to touch base with, and respect that WMC ideology and visionary leadership that Roy Waddle instilled in that organization, and try and bring some of those values into the organizations that I lead.
Yeah, I'd reiterate the same. You know, I've been fortunate enough to work with some great people, some really strong leaders, strong CEOs. You know, my time at Canaccord, I was able to work with my father, which was really neat and a great experience. And from there, like the first deal we ever did was we did Endeavour Silver at 10 cents. So getting to know Brad Cook at such an early age and seeing these types of people and how they work, it's been, you know, really quite fortunate. And every opportunity I've had, I've worked with some great people, especially on the CEO side, which has been really helpful for me kind of grooming towards this role.
Well, I'm looking at this panel and oh, hi, Dustin, I see your hand up there.
Well, I got to actually make a shout out to Alex here, because I think one of the most important skills you can have as anybody in life is knowing what you're good at, but also knowing what you don't know as well. And Alex is actually an ongoing mentor of mine. He's a big shareholder of Kingfisher, but he's also been helping me learn a lot about the capital markets, things that did not come naturally to me as a technical person. And it's really accelerated things, and it's great having him there all the time. So That's a key component of leadership, knowing what you're good at and knowing what you need work on, and surround yourself with people that will actually make you achieve those goals.
Yeah, thanks, Dustin. That's why I stayed away from the technical question earlier.
We let you get away with that one, Alex.
Thanks.
Thank you.
Good job, Craig.
But I think that's a really nice
for the ESG.
I think that's a really nice way to end things. I think that my black heart is almost thawed by that, Dustin. 15 years on Bay Street, I almost have a heartbeat again. I'll let you know. But no, I think like it's been a pleasure to work with all of you, and some in smaller and some in larger capacities. I think we did a lot of the new to market webinars for this group. And it's just, yeah, I'm really impressed by the quality of CEOs that are stepping up and taking companies public. In Canada too, which, Cherie, I'm sure you don't have that much experience running a Canadian company, but I'm glad you chose our exchange. And yeah, I think it's been a real pleasure getting to know you, getting to know your projects. I wish you all the success with the Truth Machine. But yeah, I look forward to working with you in the future and following the stories. Vanessa, anything to add here?
No, you pretty much summed it up. I just see a panel of real talent in front of us, and I want to do a part 2 of this. It just went by so fast. So thanks for sticking on, everybody. Thank you for.
Sorry to overextend, but I think that it was a valuable session. I learned a lot, and hope the audience that remained learned something as well. And Tina hit her goal. So
hey, there we go.
Yeah.
I suggest with part 2, we all pick our favorite cocktail and then really let the conversation go. That might be. Just a thought. Yeah. No.
In person at Paper Creek.
Yeah. Let's just drill a little more first.
Anyway, thank you all for participating. Thank you to the audience for participating, and a big thanks to Rick Roll for being willing to be subjected to questioning by Vanessa and I, and to all you as well. I really appreciate you doing this. Thank you.
Thanks
so much, Vanessa. Cheers, guys.